Hello guys and welcome back to the channel. So I wanted to take a look at Roku, which is the stock that made Cathie Wood sell Palantir. I'm an ultra bull on Palantir and I'm trying to see what I can sell to buy more Palantir in case the stock goes down. However, you need to have your eyes open, and basically Cathie Woods recently sold all her Palantir holdings 100% to go into this company called Roku. And I just wanted to take a look if I'm missing something, or maybe this can be another company that I can invest in. And I was really ready to hate this company as a Palantir bull. I like to think Palantir is the only amazing company. And it was quite interesting what I found. So let's get into the video. And if you like this, make sure you hit the subscribe button so you don't miss any of the new videos. So Roku. So this company has been absolutely devastated. Like, this is one of the most devastated companies outside of maybe Robinhood. From its peak in, when was it? What is it? July 28th. So in the last 6 months, it's down 80%. Okay. So if you just look at this chart, you would think, okay, this must be an unprofitable company that is hurt very bad by inflation. And it's a growth company, right? And you would be sort of right. The thing is, it is a growth company, but it is a profitable company. It recently has become profitable. So the question is this 80% drop in price justified? So let's dig a little deeper and let's find out. So Roku. So first of all, what is Roku? So I really tried to create an account and test them, but as I live in Sweden, unfortunately, when I try to open an account, it says that, yeah, basically it's not available in Sweden. So I have a very limited view on this, and this is as much as I could find out. So they basically sell you players that is very similar, in my understanding, to like a Google Chrome or an Apple TV. It's very cheap, and it lets you, it's basically like a smart TV OS for your TV. So you buy like a TV, and then this TV is the operating system, and then you can of course watch your Netflix and Disney Plus, and they have their own original shows also. And this is basically 100% streaming. And as far as I understand, then as you watch, they learn more and more data about you, and then they can sell you personalized ads. I mean, not sell you, they sell advertisers personalized ads. So the ad system is very similar to YouTube. So what they are doing is they're taking the dying dinosaur TV, where you had to have like basically the whole program has the same ads for everyone. And instead, Roku knows, okay, what's the age of the person that is watching, what's the interest of the person that is watching, and very much like in a YouTube style, it can target ads to the right people, right? And to be honest, it's actually a fantastic idea. The more I looked into it, the more I see the potential in this. I was very skeptical in the beginning, but it's like making YouTube out of TV, but the content is obviously not YouTube content, it's actual TV content. So now, how does the financials of this company look? So let's look at some important data. So in their income statement, they were profitable, 313 million. That's up from 72 million the year before and minus 42 million from 2 years ago. Now, very important for us, does the balance sheet hold any debt? So, and how much debt? Because having a lot of debt can be very bad in this market environment. And also, are you burning money? Because if your stock price is low and you need to raise capital, then you dilute the shareholders very much. So how is the outlook on this? So if you look at their balance sheet, they have 2.1 billion in cash. That's a nice chunk of change there. And then you look at liabilities, the total non-current liabilities. They have 474 million long-term debts, and that is not bad. Basically, from the cash, they can pay it back at any moment that they want to. So it's not a concern at all. So now we look at their cash flow statement. And we can see that they run free cash flow the last 2 years. That's also a very, very good sign. So now what are other metrics about this company? Because so if I look from balance sheet, looks pretty good. If I look from growth, it looks pretty good. So now so basically it looks like a good company, right? But it can still be way overvalued. So we need to find out, is it at a reasonable price? And to find that out, let's look into their shareholder letter for a bit more information. So basically what I find here is they had very nice revenue growth in 2021, which is probably helped by COVID, right? Their platform revenue increased way more than their revenue. So that is like the revenue that they got from, not from selling the players, but the actual like ads or whatever is connected to their operating system. Gross profit up 74%, fantastic. So this for me what is really, really good. The average revenue per user grew 43%. So if you look, the active accounts that they have has grown only 17%. However, on every user they were earning 40% more money. So that's a fantastic sign of very good changes within the company that shows that they really know what they're doing. They basically, I could see in their report that this is the revenue that they get from selling you the smart TV. So here basically you can see the revenue that they get from selling you the players, and this is the profit that they get from the ads and their platform. And I believe that, here you go, yeah, exactly, they also made it clear in their shareholder letter that because of inflation the cost of the players has gone up, but they are deciding to insulate the customers, meaning that they're selling you the players at a loss, obviously, because this is their entry point to Roku, and I guess they make this money back on the users as long as they stay. So that's a smart business policy, and they basically guided in their outlook that this is going to continue. And this is where they got a bit hammered after the report, that they are expecting to be negative in Q1. And they are expecting to also absorb the costs of the players, so that's going to lead to more losses, and they are not sure when this is going to change. Here you can see their total revenue, fantastic growth, 45, 52, 58, 55% per year. This is their platform revenue, so that's like after the players that they have sold you. So here you can see that they have a 60% gross margin on their ad product, and they see significant possibilities still to increase in this field. So what's interesting with this company is that they don't need to grow in terms of active users if they can find ways to monetize the users better, and they are actively working on this. And they have stated that basically 50% of TV that people watch is on streaming. However, the ad budget is only like 20% that is on streaming. So even this is also interesting, that if the streaming itself doesn't continue to grow, which I don't see how it's possible, I'm pretty sure that it's going to grow, and just the ad spent gets equalized on what companies spent on streaming as opposed to TV, that also gives them a growth possibility. So now we come to the valuation of this company. So far the company seems very solid, very good balance sheet, it's profitable, and the price is 80% down. And the question is, what is a fair price for this company? If I go over to TipRanks, I can see that the average analyst thinks that this stock should be worth $190. So that's a 91% upside from here. That is pretty good. If I look at simpler metrics like PE ratio, 58%, that's still quite a high PE ratio. However, with the growth potential that this company has, it puts the PEG rating of the company to, it depends on how you look at it, but I would guess that if it grows 50% how it has been growing per year, then you would get a PEG ratio of 1. So that's a quite good price. I would do a DCF for you guys, but I'm not skilled enough and I wasn't fast enough to do this yet. So based on the valuation metrics so far that I can see, it's a quite undervalued company, and it's definitely worth more research if you're looking for new stocks to buy. Obviously, I'm still choosing Palantir over this. I'm definitely not selling my Palantir, but maybe as I do more research, this could be something that becomes interesting for me. So please let me know if this video helped you. I will see you in the next one. Bye bye.